My name is Campanale. I'm the founder and executive director of the Carbon Tracker initiative. Carbon Tracker was founded because we were looking at the data on fossil fuel reserves and publicly traded companies, and we realised there's more fossil fuels listed on the world stock exchanges in companies like Shell and BP and Peabody than can possibly be burned if we were to have a chance of staying below 2 degrees. So we're a team of financial analysts, and we're a think tank that looks at these issues and carbon budgets and the role of asset owners and investors. So I've got some thoughts which I'd like to share with you. If the challenge is to keep the fossil fuels in the ground, how do we as investors and as members of pension schemes work with fossil fuel companies to begin to change and move towards this transition to this low carbon future? So we've got a couple of steps, the first of which we think is that pension funds should ask the companies, the fossil fuel companies in which they invest, to develop a blueprint or a transition model where they will effectively phase themselves out and begin to close themselves down to keep within this 2-degree budget. So to help them with this transition plan, Carbon Tracker is developing its energy transition blueprint. The second thing we're working on is what we're calling Capex Tracker. So if you go to carbontracker.org, you'll see details on Capex Tracker, and what it does is it monitors the capital expenditure by these large listed fossil fuel companies on all the new projects they propose to develop. And obviously, if you can't burn what's already listed on the world stock exchanges, what's already been financed, why raise money to develop even more? And so we'll be looking at that very closely and think also that pension funds should be tracking how these companies are using what is in effect your money and my money to develop projects which could ultimately be called stranded, what we call stranded assets. So that's the second thing. The third thing that we think pension funds can do is to work with other stakeholders, including financial regulators and central banks, in getting financial markets structured in such a way as to align with an orderly transition to 2 degrees. So what does that mean in practice? Well, we'd like companies like Shell and BP to be required to disclose how much carbon dioxide is in their oil reserves and their resources. And we think this is probably the best leading indicator of where we're going on climate, because once you've added up all the CO2 in the reserves of all these big public companies, we can calculate how different that is from the carbon budget to 2 degrees or to 3 degrees. So a lot of this will sound pretty esoteric, and I'm sorry it sounds like it's a lot of detail, but what we're really trying to do is accept the case that these fossil fuel companies will have to contract and ultimately unwind themselves to keep within 2 degrees and keep the planet safe. And that's something that big pension funds like the ones we have here in the UK and the ones you have in the Netherlands like APG and PGGM have a crucial role in getting involved as investors and beginning this low carbon transition.